Ladies and gentlemen, good day and welcome to the Q2 FY23 earnings conference call of Onward Technologies Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. At this time, I would like to hand the conference over to Mr. Anuj Sonpal, CEO of Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Onward Technologies Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the second quarter and first half of financial year 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Jigar Mehta, Managing Director, and we also have Mr. Devanand Ramdasani, Chief Financial Officer. Without any further delay, I now hand over the call to Mr. Jigar Mehta. Over to you, sir.
Thank you, Anuj, and good afternoon, everybody. It's a pleasure to welcome you all to the earnings conference call for the second quarter and first half of financial year 2023. I hope you're all keeping well and safe. I want to take this opportunity to congratulate my entire team for delivering a robust Q2 performance, crossing 100 crore of quarterly revenue run rate or revenue mark by delivering Q2 revenues of 110 crores, which is our highest ever year-on-year revenue and highest ever year-on-year growth at 51%. We are continuing to see strong demand for our services in line with our medium-term objectives of achieving 100 million of annual revenue. We are focusing our entire investment budget on the top global 25 customers, which are now contributing to 78% of our consolidated revenue in Q2. Our quarter-on-quarter growth in Q2 has been 15%. This quarter, we also completed annual increments. On the cost side, this quarter, we also completed annual increments for the entire team and all the new investments that we had planned and shared with you earlier at the start of the year in upgrading the infrastructure. Now we expect the EBITDA margin to be in line with the industry in 2024, FY24 next year. I'm also proud to share with you guys all that now we have 15 clients that contribute $1 million or plus in revenue, on track to be at 18 clients by end of this financial year. I believe this revenue number will keep going up as we build deeper relations with our customers and, most importantly, deliver high value or quality services to our customers. We have also launched the Center for Digital Excellence in Navi Mumbai, which opened in the month of July. Lastly, I'm also happy that we were awarded the Best ER&D Partner for Auto Industrial OEM at the Quantic Technology ceremony in Bangalore last month. Now I hand over the call to our CFO, Devanand, to give you the financial insights. Over to you, Dev.
Thank you, Jigar, and good afternoon, everyone, and wish you happy Diwali 2022 in advance. Let me take you through the Q2 financial performance of our company at consolidated basis. The operating income was 110 crore, which is grew by 18% on quarter-on-quarter basis and 51% on year-on-year basis. EBITDA is reported as 3.2 crores and net profit after tax reported is 58 lakhs. Coming to the consolidated performance of H1, the operating income was 204 crores, which is grew by around 43% on year-on-year basis. The EBITDA reported is 6 crore and the net profit after tax reported is 1.8 crores. Company experienced substantial growth in the revenue from focused vertical equipment, industrial and heavy equipment, machinery, contributing 54% of the revenue, and transportation and mobility contribution to 30% of consolidated revenue at H1 level. Digital service line of business reported double-digit growth contribution of 12% of consolidated revenue of H1. We had a net addition of 199 employees in Q2 across the offices, taking the global headcount to 3037 employees. With that, we can open the floor for question and answer session. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Sugandhi Sood from InCred Asset Management. Please go ahead.
Yes. Hello. Congratulations on the great results, and thanks for taking my question. My first question would be on the absorption of your freshers under the TAP program, and if you could give us some color of the net additions last quarter of how much was from laterals and freshers, and also if you could generally give commentary on how your traction has been on the billing side in terms of the incremental business that you're doing.
Sugandhi, hi, Jigar here.
Hi.
So on your first question, in terms of the TAP program for freshers, so as we had shared earlier, we had about 250 engineers which were part of the program. We have more than 150 by the end of Q2, which are now deployed on projects, and another 50 which are deployed over the last 2-3 weeks. So almost 200 people are deployed on projects now, and we will see full utilization in Q3 and most importantly in Q4. So we have about 50-70 engineers in the final stages of training, some getting over end of November, some first week of Jan, and then they will get, but we have practically 100% commitment from our customers and our prospects for these engineers. As we shared last month, we are not planning to add to the program in Q3, but in Q4 or Q1 of next year, as soon as we see robust margins, we will start the program again for very focused customers as we keep expanding in our existing clientele.
Sure. So I'm assuming the net adds would mostly be laterals this quarter.
Yes, absolutely. We've already made a lot of offers in the last 3 months. In this market, as you know, for laterals, it's a 3-month notice period where they serve. And so we already have a very strong pipeline of people coming in, both at the managerial SME, subject matter expert level, and at the engineer level.
Sure.
And in terms of the second question, in terms of did you say bill rates in the international business?
Yes. So incremental business, and let me actually rephrase this. If I look at the gross margin of around 28% that you've been doing, and I know that you've mentioned in the previous call that you are accepting incremental business at a certain threshold gross margin level. So when I look at the reported number, and that's just my calculation, and if I compare it to the criteria that you use while signing new business, is that a like-for-like number, or are there some administrative and sales costs that are included in the reported number. So, if you could give me a like-for-like number.
No, absolutely. So in terms of, the gross margin which we shared earlier is what we work with at a company level, and that will continue. I don't think we will compromise on that. And more as we get exposure on the digital side of the business, I believe our margins will go up even higher. If you look at the cost structure, if that's what your question is, in Q2, it's strictly based on the fully loaded cost of all the hiring that's done in Europe and US, which includes the international transfers of 2 of our executive vice presidents, number of vice presidents to our global offices in London, in Germany, in Toronto, and that's the fully loaded cost of our front-end sales team. Right? It's not just salaries, right? As you know, it's also traveling, relocation, customer workshops, participating in exhibitions and seminars. It's the whole gamut of stuff. So I think now it's where we have fully loaded cost, so which means, and that's what I shared in the press release. Now the fixed cost is what you see this quarter. So now everything else that we do will add straight to the bottom line.
Sure, that's helpful. I'll hop back in the queue. Thank you.
Thanks.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Pratap Maliwal from Mount Intra Finance Private Limited. Please go ahead. Mr. Maliwal, your line has been unmuted. Please
Sorry. My line was on mute. Sorry, I muted it. Am I audible now?
Please go ahead.
Yeah. Hi, and congrats for hitting the 100 crore mark. Thank you for taking my question. So I just had a question around the demand side. So some of the peers in the ER&D side have been saying that there are some concerns around clients and maybe some clients delaying spend. So are we seeing any of that sort, especially in the Europe geography, where I believe that given some of the macro headwinds, there's an energy crisis going on, there's some currency issues going on. So do we see any of that maybe factoring in going forward?
Hi. No, great question. This is exactly what we were thinking of as well, and these are similar questions which a lot of people have been asking us. I got back from Europe last night. I was there for the last 8 days, visiting customers across Germany, Netherlands, and UK. And, we are seeing a huge opportunity for a company of our size. And all the customers are talking big numbers, exciting numbers. We have received some great orders. Our Europe business this year will grow 40% year on year. And we see similar traction and visibility for next year as well.
So this will be in the transport segment as well, the auto space where we are doing work around ADAS and everything?
2 areas. So our biggest vertical, as you saw in the news, is industrial equipment and heavy machinery. So we are seeing a lot of visibility there. And second is automotive, and third is healthcare. These are the 3 verticals that we are in as a focus area, and we are approaching new customers, new OEMs in all of these 3 areas across Europe. And we are seeing good visibility and opportunity in these 3 verticals.
Okay, sir. Thank you. Thank you for taking my question.
Thanks.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Sriram Rajan, an investor. Please go ahead.
Yeah, hi. I've dialed in from an overseas location, so if I'm not audible, just please shout out. Congrats, Jigar and team. It's a great top-line growth. Just a few questions. In the previous call, you mentioned that the EBITDA margin would take a hit in the short run, and now the guidance is that it will trend towards the industry level in FY2024. So maybe I assume short run to be a few quarters, but this is kind of more than few quarters. So we have some comment on this.
Sriram, hi. No, thank you. I think top line growth is what we've been sharing for the last few quarters in terms of the visibility that we were seeing from our customers. In terms of EBITDA, as I said, what we believe is we went through an investment cycle where we had committed approximately 25 crores of OpEx investment in sales, in manpower, in SME investment and training. We are at the end of that cycle, and that's where we shared very positively that we believe that now all additional new business that we do will be high quality business, which will go straight to the bottom line.
Okay.
And FY24 means FY23-24, which starts in 2 quarters.
Okay. That helps, Jigar. I think if you look at your press release, the management comments page, we will see the returns directly impacting margin. Okay, maybe to be interpreted as positively impacting. Okay, got it. Okay, now you said that you would the TAP program is done. You will resort to lateral hire, given that people are showing up on the joining dates. But suppose you go back to a TAP program, like you just referred to the earlier question, few quarters from now, or when the numbers look a little bit robust at an EBITDA level, will there again be a swing downwards? Suppose Q1 of next year you start another TAP. The subsequent quarter we're going to see another downward shift in the EBITDA, or will this be a kind of a number that goes up and remains like that and continues to go up going forward?
Sure. Sriram, all our decisions are based on our visibility or our projections of getting to $100 million in revenue by 2025.
Correct.
Our investments are based on that. So it's not based on individual transactions. It's based on how our customers are moving and what we are hearing from our customers. As of today, our customers are quite bullish, and we see a huge opportunity in terms of building specialized niche skills through various training programs for them, and that's what we continue to do. So I don't think it will be at a compromise of EBITDA. When we started earlier this year or late last year in November, it was the first time Onward Technologies was doing it, and hence it was important for us to share with you guys that instead of just doing laterals, which we were doing for the last 3-5 years, now we're also investing in the pyramid structure.
Okay. So when you say, it's my last question, when you say you trend towards the industry levels of EBITDA, see there's at the top end there are companies which are at 20 plus, 22, 23. Are we talking about those margins?
I'm sorry, can you repeat again?
Yeah.
For a company of our size is what we mean, yes.
No, I think my question was, we say, your statement says we expect EBITDA margin to trend towards industry level, okay, for a company of your size.
Yes.
So do we consider this to be in the upwards of 15, 20 or above 20? What do we consider this as a guidance?
I think low to mid-teens is what I would say.
Fine. Okay, thanks, Jigar. I will hop off shortly. I think the connections here are not stable. Wish you all a wonderful Deepavali and a great Q3. This results are very encouraging. Thank you.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. To ask a question, you may enter star and 1. We have the next question from the line of Sushant Kumar from Blue River Capital. Please go ahead. Mr. Kumar, your line has been unmuted.
Hi, Jigar.
Yes.
Hi, Jigar. Congratulations on a decent set of numbers. Just wanted to pick your brains on a couple of things. So one is, obviously, this time we've grown 18% quarter on quarter. Just wanted to double check if there's any sort of one-time, any project revenue sitting there in the quarter, or can we consider this 110 crores as a new base?
Yes, hi.
Hello.
Yes, there is no one-time substantial revenue. Our business is comprised on 2 engagement or revenue models that we have. One is time and material, which last quarter was 88% of our revenues, and 12% is fixed price. So, right, that's our revenue, and we keep bidding for more and more time and material kind of projects, and that's, we believe, is the right more for a company of our size towards our first milestone.
Sure. And some of these projects that you're working on, these are multi-year engagements, right? Not like one-time, non-recurring kind of engagements.
Dave, you want to take that?
Yeah. So I would like to bring to your notice that the majority our customer engagement with the OEM, and once you enter with the engagement with the OEM, the MSA is more than 5 years and more than 5 years. And what we have seen, witnessed in the past, and that our top 5 customer or top 10 customer are associated with the more than 5 years with that. So, and one more color I would like to share with you that our top 25 customers, which are contributing our 76% of my H1 revenue, so which was the 63% of the last year. So what we are doing that the association with the customer are more sticky, and we are mining with our customer wallet share. That is giving a more confident relationship.
Sure. And could you also please shed some light on the deal wins over the last 3-4 months, and how does the deal pipeline look over the next few months, next few quarters?
Sure, I'll take that. So again, deal wins for us is a bit of a different terminology. What we use the terminology is existing clients and new clients. Our visibility with our existing clients, it's at a extremely strong, which gives strong on a year-on-year growth basis. We shared this earlier. Onward has 3 lines of businesses: mechanical, electronics, embedded, and digital. Mechanical is where we are very strong at, or where we were strong at historically, and we are seeing good traction there from customers. Digital is where all our energies and focus is, and we are seeing very, very aggressive opportunity pipeline from the customer. And that supply also is very hard because obviously there's a talent shortage on the digital side across. So we are fighting a different battle there. And electronics and embedded, we are focusing on very few customers and or prospects, which are through references, where the visibility is amazing, where we are investing proactively, or we've already invested in labs, in various test cells, and that also gives us a good long-term visibility with the existing customers. So all 3, as I said, we are not going deal by deal. For us, it is visibility and mining existing customers.
Sure. And just lastly, on the margin, say if I look at your Q2 numbers, right? Now your revenues have gone up by 17 crores, but even our expenses above EBITDA, our operating expenses have also gone up by 17 crores, right? So effectively, we haven't seen any operating leverage, at least in Q2. Now, say going forward, I mean, just a hypothetical question: if say our revenues go up by 10 CR, and you mentioned that fixed expenses won't go up from now on. So is it possible for you to quantify it a bit for us to help us understand the margin trajectory better?
Dave, you want to take that?
Yeah. So your observation is perfectly correct that the revenue has grown and the expenses is also grown in the line with that. Therefore, the EBITDA margin is not grown substantially. As you aware or not aware of that we are in companies in investment mode. For example, there are a number of people has been deployed to the sales and marketing department and moved from India to the foreign base to set up the overseas base for the customer exploration and wallet share increase for the offshore revenue. So that is called as an investment, which return will come in the subsequent quarters. Similarly, we have the one TAB program where that we train the graduate for the 6 months to 9 months training program. Their cost has been also embedded in this Q2 results, which might be not there because out of the substantial chunk of people is already got billed in Q2, end of the Q2, and balance half of them is already billed in the starting from the October month. So we can see that their full revenue cycle would come in Q3 and Q4 on that. So which directly hitting to the improving my profitability in coming quarters.
Would it be possible for you to quantify it a bit for us? I mean, some of these costs that you are referring to, sort of the one-time costs that are sitting there in the P&L.
So we generally don't give any guidance kind of thing, but if you ask me the cost-wise, base-wise, it's about 2.5 to 3 crores, which is one of the costs is incurred, which is substantially taper down in the coming quarter.
But say on that, when you say 2.5, 3 crores, that is what 2% margin, right? Effectively on your 110 crores of revenue. So even if that.
So what I'm saying, this is the cost, and second is the investment. For example, the salesperson who moved to the UK unit, UK and other overseas territory, they need time to set the ground, and they will then thereafter the yield will come in the returns on the investment will come.
So that is over and above this 2.5, 3 crores.
Correct.
Understood. Fair. Cool. No, thanks a lot for this, sir. Thank you.
Okay.
And all the best.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Sugandhi Sood from InCred Asset Management. Please go ahead.
Yes, hi. Thanks for taking my question again. I wanted to understand if there's any change in the receivable cycles, because last year we've seen an uptrend in the receivable days, and it has come down in the first half. Or what's the outlook there? Why is this number going up? Because if I look at your OCF, and compare it to the profit that was generated, there is a significant drag because of the working capital. So how should we be thinking about receivable days going ahead?
Yeah, I will take. Yeah, so when is the good witness is that we are improving our DSO cycles, and there is no change in methodologies on that. So our DSO is improved by approximately 5 days from last year to this first half 6 months. And what we have done that we have improve our existing setup process where we send the invoices on the time, or we promptly send to the customers invoices. We process on the basis on the value invoices on priority basis, and the digitization which we have done in the last year, where the ERP and the other timesheet system, which now they are giving inputs on time, which will helping us to the raising the invoices on time. So that is the reason which is behind the improving our DSO cycle, and we see that is another 1 or 2 days improvement is visibility, where Q3 and Q4 we work on hard to improve further on that.
So, but we don't expect to go back to FY21 levels. And is there any receivables on account of from statutory authorities? I think you mentioned there are tax and authorities and receivables on account of those. Are they part of this number, or they're accounted elsewhere?
No. So DSO never counts any receivables from the department. So first of all, that I would like to clarify to you. And our ambition to reach out to the 21 level, what is the progression? It is not that it's a day one job. We work with the large OEM of the world, and you know that any contractual terms needs to be changed at the headquarter level, and there are a lot of processes involved in that. So we are working on that, but visibility-wise, next 2 quarters I can say that still 1 or 2 days rooms are there where we can improve, and subsequently we see that how the things are panning out, and we will work towards to the reach out to the FY21.
Sure, thanks. That's understandable. So also in terms of your ambition to get to that $100 million, I know that you're focusing on 25 accounts. And you do have a long, relationships with, your top 5 customers you mentioned. Of these 25 target accounts, how many of them would be, 5-year-old or longer relationships?
If you ask me, the top 5 customer out of 4 customer are associated with the more than 5 years, and 1 customer is about 3 years on that. So that's the relationship.
So let me jump in here, Dave. So Nandi, I would like you to think of it a bit differently. So yeah, one is what Dave mentioned about actual facts. But what is very important and how we would like you to look at Onward Technologies is every new customer that we are winning or every new customer that we are signing, that we are winning and we are engaging on a new project is quickly becoming a $1 million client.
Sure.
And they will grow the fastest because the new clients that we are winning are all on the digital services side. So wherever we are able to ramp up very quickly across North America, Europe, and or in India, they are becoming some of our fastest growing clients because that's all on the digital side. Some of the 5-year relationships that we have are on the mechanical side. And those accounts on the mechanical side will grow 15, 20, 30, 40% year on year. But the digital side, there's, as you already know, has completely unlimited or massive opportunity. So our energies are going in both the directions. In our existing mechanical accounts where we have 5-year-old relationships, and how do we mine them better and convince them to give us an opportunity on the electronics and embedded piece and on the digital piece, digital side of the business. And we are seeing some very good success and pipeline there. But on the second, how we would like you to look at Onward Technologies is the new clients that we are winning are the ones which are going to be the fastest growing accounts for us because we are entering from the digital side through our digital capabilities, doing projects for them, whether it's offshore and or on-site. And once we are established in the customer, we are then getting onto the embedded and the mechanical piece as well. While the customer profile looks the same in the industry vertical, but that's where the growth is coming from.
Sure. So again, coming back to what comprises digital, because the way you have classified it in the past is that a bulk of your employee base of your revenue comes from ERD, and then there's around 12% from digital this year. So when we say ERD, does that include things like embedded and autonomous also, or is that just mechanical? And what is digital? Is it more than analytics and cloud related work, or is it within engineering, the electronics bit also?
So great question. So let me answer that. So ER&D, as we've clarified before, includes mechanical plus embedded electronics. So it does include some of the work that we're doing on HMI development, some of the work we're doing on ADAS, some of the work we're doing on telematics. Now, on the second question, what comes under digital? If you see the earnings presentation, if you have a copy of that, we have classified that in on slide number 4. Exactly what comes under digital for us, right? Which is fundamentally it is digital engineering, automation, cloud and DevOps, big data analytics. So these are the areas and skills where we are building competencies.
Sure. Understood. Thank you. That's it.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Nishit Shah from Ambika FinCap. Please go ahead.
Hi, Jigar and Dev. Congratulations on a very good set of top line. Hi, Jigar. Am I audible to you?
Hello?
Yes.
Okay. So my first question is, you mentioned in your press release that...
I'm really sorry to interrupt. This is the operator. Mr. Shah, if you could come close to the instrument.
Yeah. Am I more audible?
Yes, sir. Please go ahead.
Okay, so margins, you have mentioned that we will see the returns directly impacting margins in the coming quarters. We expect EBITDA margins to tend towards the industry level during FY24. So what I'm trying to understand is, when I see the large players, leaving aside Tata Elxsi, because that's at industry-leading margins, but if I look at L&T Technologies, or if I look at KPIT or the other companies, they are all in the range of 16 to 18%. So are you indicating that FY24 we should be inching towards that? That's my first question, Jigar.
So hi. So we clarified that earlier. We believe now the fixed costs are taken into consideration. We have a global team in place. We have a running engine. I believe we have good visibility to deliver industry level. Some of the companies you mentioned are not companies of Onward Technology size. I think they're about 10 or 20 times our size, and we don't necessarily compete or compare with them. But I'll talk about companies that are about 400, 500 crore of revenue. We believe we can be from low teens to mid-teens in terms of EBITDA margins if a lot of things go our way as we have planned it for next year.
So, Jigar, on the top line, you have delivered 18% quarter on quarter, and you said that you have a pretty robust pipeline. So, would it be fair to extrapolate and say that you will be able to sustain the momentum over the next 4 to 6 quarters?
So the goal for this financial year, again, we are not playing a quarterly game here, Mr. Shah. For the goal of this quarter for this financial year, what we had said was we will beat previous financial year's number. Last year we grew 28% on an annual basis, and we believe this year we'll easily cross 30%. Today's run rate looks optimistic, much better, but I would like to continue with that as guidelines. And the next quarter, the next financial year and the following financial year, if we can grow 35% year on year, I think we get towards our goal of 100 million. That's how we see Onward. So I'm not necessarily going by just the quarterly up and down swings per se.
I understand that. You don't want to necessarily raise expectations at this level. That's fair point. But on the margins, you think we seem to have bottomed out on the margins, or are we still to continue investing for the sales and the after sales, etc.?
We believe we have done with the first phase of investment of the 25 crores that we had planned for this financial year, and I think that will see us through for most of next year as well.
Understood. Thanks a lot, and all the best. Thank you. That's all from my side. If I anything, I'll come back on the queue.
Thank you. We have the next question from the line of Ishan Daga from Real Group. Please go ahead. Mr. Daga, your line has been unmuted. Please proceed. If you have muted the line from your end, please unmute and proceed.
Yeah, sorry. Am I audible now?
Sure, please go ahead.
Yeah, thanks for the opportunity. Just wanted to understand the revenues from geographical side, how it is break up across the geographies, and in the revenue growth of 18%, what is the contribution from international part and currency part which is coming to aid this revenue growth?
Hi, Dave, you want to take that?
Yes, Mr. Daga. So I would like to clarify to you that our revenue proportionate is that 51% comes from the international business and 49% from the India business. The last quarter we have the 50-50, and this is the proportionate on that. So technically, in percentage term, you see that the both are the grew on the same proportionate on that.
Yeah. So in international part, is it US predominant or Europe?
Yeah. So yes, US is out of 51%. US contribute about 43%, and balance is Europe on that.
Okay. Okay. So in this 18%, we can say 4 to 5% is aided by the currency, kind of.
Yes, currency is also helping.
Sorry?
Yeah, currency part is also there.
Yeah, yeah. So how much is, can you quantify it, because it will be quite helpful that we can have the core growth and the currency growth, and it would be quite helpful.
Okay. Honestly, this data I don't have, but I understand what your question is, that you wanted the constant currency growth and...
Yeah.
No. Okay. We will supply through information through our IR agency, and we will provide you.
Yeah, sure. And on the outlook part, we want to almost double our revenues by 2025, and we want to grow our margins between in mid-teens kind of. So the revenue, the margin outlook which we have is, if we achieve that margin outlook, so can you throw some light how we are going to improve that margin? What will be the operating levers to attain that margin?
Sure, I'll take that. Operating lever in any tech company or IT company is offshore revenue.
Yeah.
So that's what we have to do. To do offshore revenue, you have to build credibility with the customer first. And that's where in this remote environment where you just come out of COVID last 2 years, everything is remote on-site. As soon as we earn the trust and respect of the customer, we are now bidding for several projects and several engagements which are all offshore. And once we start winning some of those projects, which are dedicated offshore engagements, that's where we will see the huge margin lever.
Yeah. Thanks for the answer, and all the best for the coming quarters. Thank you. Thanks, Jigar and Dev.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. To ask a question, you may enter star and 1. We have the next question from the line of Sriram Rajan, an investor. Please go ahead.
Hey, hi. Just a clarification to Dev. When you say 51-49 international and domestic, I presume these are all the top Fortune customers, but 51 being serviced on-site and 49 being serviced offshore. Is that understanding correct?
Yeah, Mr. Rajan, this is not the right interpretation. So 51 contribution from the India business means, as you know, that we have the two business verticals. One is the India business vertical and is the international business vertical. International business vertical means where we bill in the foreign currency, and India business vertical means where we bill in the INR currency. So that is the proportionate 51 for IB business and 49% for the India business. Offshore and on-site business have different model where we see that if the people, our resources are working from the Onward premises, then it is called offshore. And if the Onward employees work for the client premises or the dedicated location, which is the client has defined, it is called on-site. That ratio is different. That ratio we have also published in our IR deck. I just refer to you for your reference purpose on the slide number. Slide number 13 of this, if you see, 72% is on-site and 28% is offshore.
Okay. So when we say 50% approx was India business, so we have clients in India whom we are servicing locally. Is that what it is?
So if you wanted to understand what is the on-site ratio of India business, is it?
No. I'm just looking at a high level. So when we say 50% of our business is domestic, does it mean that 50% of our revenue is coming from customers who are based in India and we're billing in India?
Correct.
Okay. Okay, thanks. Mike, I'm done. Yeah, thanks.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. As there are no further questions, I would like to hand the floor back to the management for closing comments. Please go ahead.
Thank you. Again, thank you everybody for joining us today. It's been an absolute pleasure. We are very excited with the progress we have done last quarter with record revenue growth, both on a quarter-on-quarter basis and year-on-year basis, and crossing the 100 crore a quarter milestone, which is the first time in our history. We are positive of maintaining the momentum, and are excited with closing out the year and looking forward to 2023 and 24. Happy Diwali to everybody, and speak to you all soon. Thank you.
Thank you, members of the management. Ladies and gentlemen, thank you, sir. Ladies and gentlemen, on behalf of Onward Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.